Oh,
right? Because there's not that much funds.
okay. Everyone, just a note before we get started, please put yourself on mute unless you're talking, obviously. And if you've got voice activation on, make sure you're on mute because that'll activate it. All right, cool. Welcome everyone to the first Daily Gwei AMA here. So I decided, a few days ago that I really wanted to start doing weekly or probably bi-weekly or every couple of weeks AMAs, just so that you guys can ask me questions, anything about Ethereum. It doesn't have to be just me answering it. If anyone else wants to, chime in and answer or anything like that, I think that'd be really cool because I always see tons of questions in the Discord channel, and I figured, why not just jump on a call and you guys can ask me whatever you want, and I'll try and answer as best I can. So yeah, I mean, there's no real kind of structure to it. Like, feel free to just speak up if you kind of like have a question or wanna ask something, but just be courteous and try not to talk over other people or anything like that. So yeah, I mean, without further ado, feel free to ask away.
I have a question about the AMA. Will it be on stuff um, like for the Daily Gwei, or can we ask stuff about like Ethereum and other ERC20s and stuff like that?
Yeah, anything got to do with Ethereum or even crypto in general, it's pretty free flowing. So yeah, feel free to ask anything. It doesn't have to be about the Daily Way or anything like that.
I have a question about Elon's tweet.
Yeah, yeah.
Um, do you think like other high net worth people will follow Elon's like I feel like it's virtue signaling at this point because there's been a lot of debunking for the environment argument, but do you think like whales will follow that virtue signaling and decide to get out of Bitcoin?
That is a question, that's for sure. Elon is a funny person. He's eccentric, right? Like your classic eccentric billionaire who basically does a lot of stuff that may seem crazy or weird to the outside world, and makes maybe a little bit more sense when you dive into it. And his recent comments about Bitcoin's energy use, while on the surface you might think, it's surprising that he would be saying this after buying BTC. And I remember he put out a tweet where he replied to Jack, the Twitter CEO, and Jack had tweeted out, "Oh, Bitcoin encourages renewable energy production," and then Elon Musk said, "True." So, there was some speculation that he put these comments out because he's trying to protect Tesla and make sure Tesla can stay in ESG friendly kind of like portfolios, the actual stock, the Tesla stock. But in terms of like him as a signal, I mean, I've written about it before. I do think he's a pretty powerful signal among a lot of people. I'm not sure how powerful he is among like other billionaires or other kind of like whales or anything like that. But among like the kind of, I guess you could call it, general tech population, people who are really into tech and all this sort of stuff, there seems to be a cult around Elon from those types of people, from what I've seen. And don't get me wrong, I really like Elon as well. I love what he's done with Tesla and SpaceX and all that sort of stuff. But I don't know. I just feel like it's always hard to tell what people are going to do and what way the market's going to move. I'm surprised that he can still have such an effect on the market, which is, I mean, only I guess in the short term. So I don't know. I wouldn't expect other Bitcoin whales to really, I don't know, sell off because of that. I think that, you know, we've been seeing Bitcoin sell off into ETH lately anyway. So I don't know if that's going to be a part of that, right? Where we see this continued sell off, where people buy ETH with their Bitcoin, or I listened to a podcast the other day on Bankless with Suzu and Carl Davies, and Sue basically said that people are flying to their cold storage bunkers to unlock their Bitcoin to trade it for ETH. Now, I don't know if he was just like saying that. I don't know like how much truth there is to that, but I mean that was happening before Elon's tweet. So I think that there's a lot more to it than just one person's kind of like tweets and signaling for these people to make moves with their money. And I I've always considered Bitcoin's energy kind of usage a really bad narrative for Bitcoin. Whether it's true or not that it uses too much energy or whatever, I don't necessarily think that matters. And I've spoken about this on the refuel, of course, but essentially what really matters is the narrative that takes hold, right? And what everyone else wants to kind of like believe about this sort of stuff. So yeah, hopefully that answers your question. I don't think there is a straight answer for it. I think that you have to consider the whole and how different rational actors will act. But I'm not sure if Elon's comments are going to influence that too much.
Yep, that's a great answer. Thank you.
No worries. I just noticed my camera died. Oh, there it is. Cool. Yeah. Anyone feel free to ask anything or chime in, I guess, like to what I was just talking about. Maybe someone else has a different opinion to me. I'd love to hear other people's opinions on the energy use debate. I think that's like, pretty hot right now, and definitely going to get hotter as time goes on. I've kind of like, I guess, said that for a while, that I thought that would be something that it's going to be hard for Bitcoin to defend against. But yeah, curious to hear anyone else's thoughts that have done deeper research into this.
I mean, I was asking about it because it seems like from Anthony Pompliano's Substack, he put out some like reassurance that the wallets, the like mid-tier wallets are increasing, but he did mention that the super high net worth wallets are decreasing. But I think you're right in that there is the effect of people just switching into ETH just for the riding the wave up on EIP 1559 and the merger. So you can't really differentiate between Elon's tweet and that effect. And so yeah, that's my thoughts.
Mm-hmm. Yeah, there's so much going on, and there's so many different reasons why people sell and what they sell into, and what part of the cycle it is. I did see something about like large Bitcoin wallets kind of getting reducing in size, but again, that could be because the price went up so much, or they could be trading it for ETH. I mean, ETH has had a pretty amazing price movement, especially on the ratio for quite a while now against Bitcoin. So yeah, it could be for a number of reasons, but I do think that Elon bringing more attention to the energy debate is it's accelerating what I thought about what I thought was an inevitable debate anyway. And it's Bitcoiners are doing like a pretty good job of putting together information and trying to defend against this. But at the end of the day, I don't know how much luck they're going to have, because if you really think about it, climate change is pretty much, I think, the number one threat facing humanity, right? So whether people actually listen to other people's reasoning behind this, or just take a hard approach and say, well, if we can reduce our energy consumption, then we should. And I know there's moral arguments about this and all that sort of stuff, but I guess for me, it really comes down to how complex it is to explain these things. It's really complex for Bitcoiners to explain to people things like, how much energy is Bitcoin using? How much of it is renewables? Does it actually encourage more renewable energy? Rather than something like Ethereum or Ethereum people saying, well, we don't even have proof of work anymore. We have proof of stake, right? And we don't even use this energy anymore once the merger happens. And that's just a much simpler thing to do than try to convince, swathes of people. Like if you look at what happened with the NFTs, and I don't know if some of you saw it on Twitter, there were literally, thousands and thousands and thousands of people who were just like, completely against NFTs because of their energy use, and they didn't listen to reason. A lot of their arguments were pretty stupid, if I'm being honest. I saw a lot of them, but the thing is about with a lot of this is that the narrative is always more powerful than the reality, and the narrative of cryptocurrencies and the energy that they use, specifically Bitcoin, right? I know Ethereum is pretty bad here as well, but that narrative is just so powerful, and I don't think any kind of like debate is gonna help with that in the long run. I just think that it's going to be so hard to win that narrative war. Feel free to, I guess, anyone else who wants to ask about anything, anything Ethereum, anything crypto, anything you're wondering about. Maybe you want some clarity on what happens with the merge or with 1559, all that sort of stuff. Feel free to ask.
I do have a question, but it's not related to the energy thingy. It's actually related to the fact that there's a lot of talk about institutions buying Bitcoin, and then there's a lot of talk about institutions buying Ethereum, and mainly that they're on the sidelines. But is there a possibility that corporations and institutions are not interested in buying Bitcoin or Ethereum but are going straight into maybe UCDC, the coin of the stable coin of what's it called, Coinbase. So they're probably circumventing buying Bitcoin or Ethereum. They're inside the crypto ecosystem, but it has no effect on the price itself because they're into stablecoins. So they just circumvented the Ethereum cryptocurrencies and others.
Yeah, I think definitely. But I think, even if you look at how institutions play these things, I mean, there was a tweet the other day from Stani that said that they're working with some institutions in some private pool to intro them to DeFi. So even if they are only playing in stablecoins or buying USDC or whatever other stablecoin it is to maybe, yield farm, or maybe they want to, basically use it as collateral and borrow against it using these protocols or whatever, I still think the magic of Ethereum is that that's actually positive, because that's adding more usage to the Ethereum chain. And then post EIP 1559, it means that ETH is getting burnt every time these institutions make transactions, just like everyone else making a transaction. So in a roundabout way, it's actually good that they're buying stablecoins anyway for ETH's value. And I think that institutions are going to get a lot more use out of Ethereum than they will out of Bitcoin. And I was actually thinking about this the other day. What if institutions stockpile like ETH and have to buy ETH because they're like, well, we're doing all these transactions and we know that we have to pay, fees to do so. So we need to buy some ETH as like operational expenditures. And then they buy the ETH and then they use it and they burn it. So effectively, not only are they putting, buy pressure on ETH because they need it for transaction fees, but they're also removing most of it from that they've bought from the supply once they use it. So yeah, they can definitely skip the assets, but the beauty of Ethereum post 1559 is that they have to use ETH anyway to pay fees, and they have to contribute to ETH's economic value, which I think is pretty cool. And I guess like on that note too, now that I think about it, like I actually think a lot of businesses will want to get into staking, whether that be as a treasury kind of diversification where they buy some ETH and they stake it as like what Bankless likes to call the internet bond and stuff like that. I do think that can happen too. But yeah, institutions have just much more options with Ethereum. Like with Bitcoin, all they could do is buy BTC and put it on their balance sheet, and they're doing that for different reasons as for why they would buy ETH. Like they're doing it as a they say they're doing it as an inflation hedge and a diversification strategy for their treasury. But I think buying ETH is just so many more reasons to buy it and to use it and to do whatever you want with it on the network. So from that perspective, yeah, I don't know. I think institutions coming to Ethereum is much more bullish than them doing stuff with Bitcoin at the end of the day.
Do you also think that when the institutions finally come and they're buying their stablecoins, do you think that there will be a market for other stablecoins than the dollars, like for example the Australian dollar or the euro? Because there's a couple of pools and other projects that want to introduce non-USD stablecoins, but they're not really getting off the ground. It's like there's not really a market for it just yet.
Yes, yeah, that's something that obviously I really would love to happen. Obviously, because I'm in Australia, I do think there's just a function of the size of the market right now. It's still very very small. Like I know that Ethereum has been growing like rapidly over the last few months, but in terms of the people using it, it's still very small. It's still very I think Americanized. There are definitely people in Australia using it. And I know of a couple of projects working on non-USD stablecoins like Handle Finance and DVX or DFX, something like that. I remember seeing on Twitter. So yeah, I mean, if there's Australian institutions and they want to play in DeFi, well, then they're going to need an AUD stablecoin. And I've spoken to the Handle Finance, one of the founders at Handle Finance, and he was saying the same thing. It's just like, yeah, this is just a pain point for these sorts of institutions or even individuals at the end of the day. So I think it's going to happen, but I think there are some Euro stablecoins right now that have some traction, not really that much. But I think it's just a function of like liquidity begets liquidity. The USD stablecoin was the first one, like with Tether and things like that. So yeah, I think that it'll happen over time. I'm just not sure how quickly. I would have figured it would happen quicker, to be honest, but maybe everyone's just fine holding USD right now.
So why can't they use something like DAI, which is just Ethereum based? So like a Commonwealth Bank, they couldn't like set up DAI vaults or something, as a back end to them, but to their front end users, just Combank app, and they're getting 5%, 10%, whatever interest.
Mm-hmm. I mean, they certainly could, but I would argue that there's still a lot of risks with a lot of this stuff. There's still a lot of things that can go wrong. Obviously, there's still liquidity issues. Like if you think about it, these banks have like trillions of dollars collectively in deposits, and if they start moving that amount of capital in, it might cause some kind of, maybe not instability, but it will cause like maybe DAI goes off peg because they buy too much of it, right? I think DAI has inherent risks where it can depeg pretty quite easily, depending on supply and demand dynamics and things like that. But yeah, long term they're all going to play. I just think that we're not big enough for them yet to do that sort of stuff, considering how much capital they have under management. But I mean, I would even think that they could just they're not going to do this, but they could just have a portal in where users can deposit their own funds in and do whatever they want. I don't think they're going to do that, and I don't think they need to do that because we have crypto native or Ethereum native apps that do that. But yeah, I see that happening long term for sure. I mean, that's the whole point of DeFi, is to replace the existing financial system. But we're still so small. Total value locked is what, 80 billion right now. That is literally a rounding error for the traditional finance system. Like that means nothing to them. The volume on decentralized exchanges is really promising and things like that. But still, for a global system, it can still be a lot higher, and the liquidity can still be a lot higher. So I think once that happens, then institutions can start moving in a bigger way. But as Stani said, they want private pools right now. They want to see how it all works. They want to see what the risks are before they quote unquote ape in right into like public DeFi. So yeah, it's just going to take time. I think still very early, obviously.
Just following up on that question with regard to Euro stablecoins, is anyone, do you know the way Maker are obviously the owners of DAI? Are they, and they're considering other assets like maybe like gold or something like this in the future? Is it possible that something like Maker would create a Euro stablecoin, or is that out of the realm of it would need to be a different DAO or something like this?
No, I think they can. It's just using the collateral to issue a different asset rather than DAI. Originally, a fun fact about Maker was that they actually had plans to not peg to the US dollar and peg to a basket of currencies and just create like this stable coin that wasn't pegged to any one fiat currency. There's a particular name for it. It wasn't invented in crypto space for this basket of currencies. I can't remember what it was called exactly, but yeah, there was that plan back in the day, and they did have, from memory, they did have plans to issue non-USD stablecoins here, but I think that the demand just isn't there yet, from what I've seen. But there's no, from what I understand, there's nothing stopping Maker from being able to issue other assets. And you could even issue non-stablecoin assets against the collateral, right? They're just synthetic assets at the end of the day. So you could issue any synthetic that you wanted, just like how Synthetics does it, where you put up SNX collateral, you can issue SUSD and SETH and SBTC and whatever else you want, right? It's the same for Maker, but I think with Maker, they've made DAI like the centerpiece, and they want to scale that up to as much as they can to generate lots and lots of revenue for the Maker platform. But yeah, I mean, I expect maybe sometime in the future they'll be able to introduce non USD DAI and do a DAI for like Euro or AUD or whatever else.
Perfect, thanks.
Awesome.
I've just been thinking about how much longer until you're going to do the dance.
Oh man, the dance. That's gonna follow me forever. I don't know. I keep putting it off, right? I think to myself, if I do this and I put it out there, it's on the internet forever. I should do it eventually. I will do. I should say I will do it eventually. But yeah,
You should do it on the flippening. When the flippening happens, then you do it.
yeah. I feel like the flippening is a bigger event than ETH reaching its all-time high. That was the original promise. That's so long ago now. Now that I'm thinking about it, 1420 and we're at 4K. Like, it's such a funny thing. But yeah, the flippening. I mean, I think we're all going to be dancing when the flippening happens.
Yeah, big time.
Yeah. On that note, I guess I can give some thoughts I've been having lately about the flippening and what it means for like the space overall. I think it's funny because it's been this thing that's been talked about since like 2017. All right, the first run up of ETH, like everyone was talking about it back then. It got really close. And then it didn't happen, and then ETH went into a really, really, really brutal bear market, as we all know, from 2018 and 2019. But in terms of like what it means for the space, I don't hate Bitcoin, but I think it's just so limited, right? Like digital gold, like how many people actually care about that or get use out of it? Like I understand that holding Bitcoin, gives you access to this like non-state affiliated money, self-sovereign money and self-sovereign monetary system. But to me, Ethereum affords you the same kind of guarantees with ETH, right? Ethereum to me is just as decentralized as Bitcoin, and obviously it's evolving and moving and going through big upgrades. But these are upgrades that were kind of like part of the social contract. Proof of stake has been around for a while as an idea since basically the day Ethereum was announced. Like Vitalik was thinking about it. Same with sharding and layer 2 as well. I mean, DeFi was even in the white paper. Like it wasn't called DeFi, but Vitalik was alluding to financial applications on blockchain. So from that point of view, I don't know. I just think that the flippening will be extremely healthy for the ecosystem. I don't think it'd be very healthy for Bitcoin though. And I said this today on the Bankless live stream I did with David Hoffman. What happens when Bitcoin's number 2? Like what keeps it at number 2? Like why can't it just keep dropping from that? Why can't it drop out of the top 10? Like the whole value prop of Bitcoin is that it's number 1, it's the hardest money, it's the soundest money, it's the thing that everyone wants, you stack sats, whatever. But when it loses its number 1 spot, all those narratives go out the window. So I think that's why the flippening is going to be such a big deal, is that it kills a lot of these narratives for Bitcoin. And I don't blame Bitcoiners for what they're doing lately with it, how hard they're coping, because it really is, in my view, an existential threat to Bitcoin's kind of overarching goal. Because the digital gold niche, and I call it a niche because it is a niche, it's got a very small TAM, like total addressable market. Ethereum has not even ETH the asset, but Ethereum the network. The TAM is the entire population of Earth and other planets eventually, right? So from that point of view, I just don't see how Ethereum doesn't flip, and that's been my theory the whole time, is that utility over belief. And Ethereum has belief and ETH has belief as an asset in it too, but the Ethereum network works to back up all that utility. So yeah, I don't know if anyone else has a different opinion there, but to me the flippening would be the healthiest thing that could ever happen to this ecosystem. And I think the ecosystem would actually go from being like a joke to a lot of the outside world to not that, because I've seen multiple threads on Reddit where people were saying, they don't understand why Bitcoin is valuable, why would they should care about digital gold, but they actually have found Ethereum and talking about Ethereum, and like I could see, that they say they could see applications for like DeFi and human coordination, like with DAOs and things like that. So I think from that point of view, I mean, it's just utility is worth more to people than digital gold. And I think that's just going to remain that way forever.
I agree.
Mm-hmm. I'm curious if anyone else has like other thoughts on that. I know we're all Ethereum people here, maybe not ETH maxis, but definitely people interested in Ethereum. But I'm always curious to hear thoughts against that. Like I haven't come across anyone who's been able to convince me that Bitcoin being number 2 isn't a catastrophic thing for Bitcoin.
Yeah, it's just a random chit chat, but like if Ethereum does flip Bitcoin, like this is all speculation, of course. If Ethereum does flip Bitcoin, people have been saying, what's to stop Dodge from next flipping BTC? And I completely agree, because I just can't do anything with it. And what you said about, does anyone in the younger generation collect gold? No, there's just been no use for it whatsoever. So utility, I think I completely agree with you.
Exactly, and that's my entire kind of view. Especially with younger people, is that none of them really. I mean, most of them. I shouldn't say none of them, but most of them don't really resonate with the digital gold thesis. I believe. I think that they resonate with the utility of the Ethereum network much more, because I mean, the utility isn't just one thing either. It's not like we have some sort of kind of like little DeFi thing happening here. No, DeFi is like broad in itself, and then we also have everything else happening, NFTs and DAOs and all the other good stuff that we haven't even thought of yet. So I don't know. For me, like Ethereum is the infinity network, right? I've written about this before. It's just like you can do anything you want on it, and it's like and someone on Twitter, some of you might know, Anti-Pro-Synthesis, uses this comparison a lot. But he basically says Bitcoin is a calculator and Ethereum is a general purpose computer, right? Bitcoin is really good at being a calculator, but Ethereum is general purpose, which is a superset of that. So Ethereum has a calculator, right? It does everything Bitcoin can do, but it does like so much more. So that's always been kind of like the thesis, I think.
I've got a question. Do you hear me?
Yes, yeah, I hear you.
So basically, the other day I bought something with my MetaMask wallet, and so I pay the normal fees. But then a friend of mine bought the same thing with Binance, and he only paid like $1. So I just wanted to know why Binance have this system and Ethereum cannot replicate
Do you mean the trading fee or the gas fees?
the gas fee.
Yeah, yeah. So, and he bought it on Binance Smart Chain, I'm assuming, not Binance the exchange.
Yeah, probably, yeah.
Yeah, that's what I'm assuming. Because, like, so I guess I'm not sure how familiar you are with kind of like Binance Smart Chain and its differences to Ethereum, but I can essentially give the rundown. So Binance Smart Chain, or BSC as it's known, is a fork of Ethereum. It is a complete copy clone of Ethereum. It uses the exact same underlying technology. It does everything the same. Like if you go to BSC Scan, I mean, it's a clone of Etherscan. MetaMask works with it and everything like that, and the experience is very similar because of that. Now, the key difference is that Binance Smart Chain is centralized. It is not a decentralized blockchain. It does not have proof of work or proof of stake. It has 21 validators that are all basically controlled by Binance, and they basically validate blocks on the chain. Now, because you've only got these 21 validators and you don't have a massive kind of like decentralized network with thousands of different nodes, you don't have to essentially worry too much about things like the block size. So the block size on Ethereum is called the gas limit. The gas limit on Ethereum right now is 15 million. So if it's essentially a cap on how many transactions can be in a block. And with BSC, their gas limit the last time I checked was 60 million. So already they have over 3x the capacity. But they've also lowered the block time. So with Ethereum, the block time is 13 seconds, and the block time needs to be, it can't be too low, because then what ends up happening is that the whole network can't validate the blocks in time, and you risk a chain split, because every time a block is produced, it needs to be validated by all nodes. And if it's too short of time, like if it's like, say it's on BSC, it's 3 seconds, but if it was 3 seconds on Ethereum, you would have the instability of the chain, because there would be more frequent kind of chain splits due to the nodes not being able to keep up with each other. So then, as I said, the final thing, BSC lowered their block times to 3 seconds here, which essentially means that they can do 60 million gas limit every 3 seconds instead of Ethereum's 15 million gas every 13 seconds. So essentially, it's much more than a 3x upgrade. It's huge. If I did the math in my head, it'd be over 10x easily. And that's why the fees are lower. Not because they've invented some new way to do something and some new technology. They've just taken Ethereum, ripped out its decentralization, and called it scalable. That is, I guess, like as concise as I can put it. Let me know if any of that needs further explanation.
No, that's fine, thank you.
Yeah, it's kind of I guess like a big debate within the community and things like that, like whether people actually care about decentralization or anything like that. My view on BSC kind of like evolved over time. Originally, I really hated it. I really hated the marketing around it, and I really thought it was a negative for the ecosystem, because it just kind of tricked people into thinking they were using a decentralized platform when they weren't. But then I learned to love it, because it actually gives people a cheap onboarding experience, or Ethereum-like onboarding experience, because they download MetaMask. They use BSC Scan, which is, as I said, a clone of Etherscan. They use, PancakeSwap, which is essentially a clone of Uniswap, and they get to do all that really cheaply. And then once Ethereum, scales via layer 2, and we get these kind of like apps live and everything like that, we get these bridges in. These users who may have never used, DeFi before or Ethereum before, now have a very quick and easy way to do that, because they have MetaMask already installed and they're already used to the experience of BSC. So they can just come over to Ethereum and enjoy those kind of low fees there. So I actually think, the price is fine for ETH as well. So it's not like BSC has been bearish. I actually think BSC, ironically, has been pretty bullish for Ethereum in general. I don't know if anyone else has a different thought on that. I thought, I don't know. It's just funny watching it kind of play out over the last few months and seeing. I saw some people say it just shows how much demand there is to use Ethereum. I kind of buy that, but at the same time, I think it shows that there are a lot of people sitting on the sidelines that couldn't use this technology or just wouldn't because they didn't know about it. I think Binance is a great, funnel for BSC. Obviously, they have a direct bridge and everything like that. But then again, I think it's just like a Trojan horse, and these people are going to use Ethereum once we get more scaling solutions out there and allow them to use just. I mean, at the end of the day, most of these people are just using, the swappers, like the AMMs, like Uniswap and stuff like that. That's what most of the network is doing. So if we can offer that to people for really cheap, but with Ethereum security and decentralization, which we will be able to very, very soon, and we already can on things like Loopring, but I think the game really changes once Uniswap deploys on a layer 2. I think that's really going to be awesome to see how many new users flock in from that.
Thank you.
All good. Yeah, anyone else? I think saw a few new people join. Feel free to chime in at any time with a question.
Hey, man.
Token.
Oops, sorry, go
on. Token when for the daily Gwei?
I don't think I'm going to be doing a token. Sorry to disappoint everyone. That's a whole can of worms I don't want to open. I think Bankless doing it is fine. It's actually going to be really interesting to see how that plays out because it's just an experiment. But yeah, the daily Gwei, I just want to keep obviously free, everything free, but I also don't want to attach a token to it. I don't know if there's a purpose really to it.
Will you at least NFT your dance video?
I mean, yeah, okay. I'll NFT the dance video and people can bid on it if they want, and I'll donate the proceeds to charity for sure.
Are you bullish on a particular social coin or one of those community coins or platforms that allow you to make community coins?
Yeah, I've been pretty critical of community coin social tokens in the past. I think a lot of them aren't going to do very well. I think a lot of them are misguided. I think a lot of them look like scams, but there has been a community that I have been made aware of, I think a couple months ago, and I've been loosely following called Friends with Benefits. It's run by a few people that I know. One of them, Cooper Turley, who's a good friend of mine. He's part of the core team. I think that can work. I just... The token, I hold some of the token, but I wouldn't say I'm holding it expecting it to go 100x or whatever, or even 10x or whatever, or it to make me any money, to be honest. But I'm holding it for access to the group because it's you buy the token, you get access to the group and stuff like that. But I think at the end of the day, the social tokens will just become DAO tokens at the end. That's kind of their function where they're used as coordination tools. I guess even the Bankless token, Bank, is a social token, right? Where they've got a DAO set up and people have these tokens and it's part of a media organization and you can vote on proposals and do all this sort of stuff. And there's other ways to do the social tokens, you can do profit sharing with an individual where an individual can say, okay, well, all of the money that I make, I'm going to share 10% with my community, and you can fund me this way, or invest in my startups that I do this way. And I've seen some people do that. I don't know. I think maybe that's really, really early still. So yeah, but the only project in that space that I've been following loosely it's one called Friends with Benefits. They got a pretty active Discord. It's pretty cool. I go in there sometimes and just browse around. But yeah, I think too early to tell kind of how that whole kind of sector is going to shake out, I think.
That makes sense.
Mm-hmm. Jacob, I saw that you had a question before as well, if you wanted to chime in.
Yeah, can you hear me well, man?
Yes, yeah.
Cool. Well, firstly, thanks for organizing this, man, and for all the good content. So basically, I'm pretty new to crypto, and yeah, I apologize if I ask very basic questions and don't want to waste anyone's time. But so I have a question about DeFi. There's so much information on it, and there's so many different apps and protocols, and the information is quite overwhelming, just to grasp it all. And so my question is, where would you say is a good starting point, to get basic knowledge and something that's also low risk? Because people say that DeFi is getting involved in DeFi is higher risk than just holding Ether, and also now ETH is outperforming DeFi generally, which is a bit discouraging to swap ETH for DeFi tokens. So just wanted to know your view on that, basically.
Yeah, so in terms of getting started with DeFi, I think Bankless does the best work here. Like obviously the Daily Gwei, or maybe not obviously, but the Daily Gwei is definitely not for beginners. The content that I produce, and that's because I think Bankless is really great at that, and I think the Defiant and DeFi Dad as well. So if you want to note those down, if you haven't come across them yet, DeFi Dad does a lot of tutorials on different DeFi applications. He's really great, and he also has something called Yield TV because he works at Zappa. And that has there are a lot of really good videos as well. Bankless has, a whole kind of media empire. Essentially, they have like the newsletter and the YouTube and the podcast. But they have a really good guide called "Getting Started with Bankless." If you just Google that, you'll be able to find that one, and it's super comprehensive. It's basically here's how you get started with DeFi and go Bankless essentially. So those three would be the top kind of ones that I would pay attention to: Bankless, the Defiant, and DeFi Dad / Yield TV for beginner guides. And in terms of risk, yes, I mean, DeFi is definitely riskier than just holding the asset, of course. Like, you can just hold ETH or DeFi tokens in cold storage or on a ledger or whatever, and it's fine, it's safe, and, but as soon as you start putting your tokens or ETH or whatever into DeFi protocols, then you expose yourself to smart contract risk, because these smart contracts are written by humans. Yes, a lot of them are audited and what's called formally verified, but there could still be bugs. And as we've seen, there's plenty of DeFi kind of hacks out there, and that definitely is scary. You can, there's insurance protocols. You can take insurance out against it and things like that if you want to. But generally, I think there's like a risk spectrum essentially. I would consider the safest DeFi apps to be the biggest ones. Like MakerDAO has been around for quite a while. All of their code is heavily audited, heavily formally verified, and their original system ran well for many years, and no hacks or exploits or whatever. Compound, same kind of situation there. Uniswap, Aave, these are like the top protocols, and I would consider them to be the least riskiest. There is still risk, but they're not as risky as some of these newer ones. And there's plenty of newer ones, right? Or what you can call like the long tail of DeFi apps that definitely have a lot more risk attached to them. So I wouldn't like put all my money into it. My strategy essentially is to kind of, I guess, like take my money and like put it on like a few different apps to kind of spread my risk and take out some insurance on it. But at the end of the day, it depends how much money you're playing with. It depends on how much yield you want to generate. Obviously, the riskier the protocol, the more yield you're going to get, because there's going to be less people in that pool. And that's why people kind of like go into these things, because there's sometimes like yield farming opportunities with token rewards and things like that. So yeah, I would say that just understand the risks, understand that there's a risk spectrum where the top DeFi apps are at the top, mainly in terms of like total value locked. I would say mainly because of the fact that they've been around for a while, they're secure, they're extremely reputable, they've been audited by, I think Aave V2 was audited by 5 different, independent auditors, auditing companies, and I'm pretty sure, I'm not sure if Aave V2 was formally verified, but I know that Maker has been formally verified, which is a way to essentially what formal verification does is it allows you to have guarantees that the code that you have written will do what you told it to do. But in saying that, there's still possibility of bugs no matter how many audits or whatever goes on. But typically with security, the longer something has been secure, people think that, the more, I guess, like the more trustworthy it is, because they think, okay, well, if it hasn't been exploited by now, then there's lower chances of it being exploited. I don't really buy into that. I think that sometimes there are just things that people miss, even the smartest people in the world, and then one guy comes along one day and just kind of like finds an exploit, right? So definitely things are scary. But in saying that, and on top of the insurance protocols, the protocols themselves can actually make users whole. And we've seen this play out in the past where there was a Yearn vault that got drained, I think, and they were able to make users whole by essentially collateralizing the treasury's YFI tokens in Maker, drawing DAI and paying that DAI, kind of like yield farming with that DAI and paying back users who had funds stolen from the yield generator. I think that's how they did it. And there's other ways to do it. Maker will print MKR tokens to cover any losses, not for users, but for like the protocol. Aave has a staking pool that acts as insurance. There's a few other protocols that have this as well. So there's that aspect to it as too. So those are the kind of like risks. And to answer your final question, unfortunately, don't give financial advice or investment advice, of course, but in terms of just general how the market works, it ebbs and flows. There's just cycles that play out. Sometimes ETH will be doing really well against DeFi. Sometimes DeFi will be doing really well against ETH. Sometimes, Bitcoin will be doing really well against everything, and then everything else will be bleeding against it. But this is essentially why it's very, very, very hard to outperform either the index of a market or the kind of like assets like BTC and ETH. Because of the fact that you have to like time your sales, you have to time your entries, you have to basically deal with all the emotions that come with that, all the anxiety and stress and everything. So as I said, I can't really give you any investment advice, but it's the same kind of thing. There's a spectrum of kind of risk you can take. The riskier assets that you buy, potentially higher upside, also potentially higher downside. So that's why a lot of people just like to stick with ETH, because ETH captures value pretty well from the network, and it will capture value even better with 1559 and proof of stake and all that sort of stuff. But yeah, generally it just works in cycles, and it's very hard to outperform ETH and Bitcoin, and it's very hard to outperform an index too, especially for newer investors.
Cool, man. Thank you so much. It's a really helpful answer. I already follow Bankless, but I'll check out the other two. Just another question, and that's just like trying to look into the future. Like Bitcoin has had its time, and it was totally dominant, and like from all the information out there, I really believe in Ethereum. But do you think like 10, 15 years ahead, you kind of accept the possibility that there might be other new chains that will create something that that's that outperforms Ethereum, as an asset? Do you look in the future, and do you ever have these thoughts like 15, 20 years ahead?
Sorry, go on.
Yeah, that's basically the question.
Yeah, I mean, so it's funny because you can look at some of these other chains and you can see that they've outperformed ETH, right? But as I said, it is all based on risk and the amount of risk you want to take on, and the way you invest, because your chance of picking something or a chain that's going to outperform ETH, right, in the long run, and as I said, outperform ETH from the moment you buy it and the moment you sell it, and accounting for taxes, I mean, depending where you are, right, the taxes can be quite high, and because you have to denominate in fiat, you can't denominate in ETH. So if you trade your ETH for something and then you make a profit, right? Well, you have to account for taxes, and then that eats into your profits, and you're basically denominated in fiat. So ETH might be much higher. So you may make a profit in fiat, but you might be down in ETH because of that as well. So there's that sort of stuff to consider. But definitely, I mean, there's no doubt in my mind that just from a pure kind of investment perspective, there will be things that outperform ETH for sure, and not just DeFi, but other chains, tokens, and things like that, for one reason or another, because they've got much smaller market caps too. I mean, ETH is a $500 billion asset, or almost these days. I think depending on what the price is any given day, almost a $500 billion asset. Bitcoin's $1 trillion. It just takes a lot more money to move these things. That's why people love playing and investing in the smaller coins, is because, as I said, there's much higher potential for higher upside, but also the downside as well. And as I said, I think people overlook the fact that you need to time your entry and exit too, and account for taxes, and then see if you're net profitable at the end, especially if you're trading your ETH or even Bitcoin for it. So, but in terms of I mean, even on the other side of it, like platforms in the future that could get usage and kind of like be complementary to Ethereum, or essentially like, maybe, I don't know, overtake Ethereum if you want to go that far. I mean, it's always a possibility. It's always a risk. I'm a firm believer that technology needs to keep evolving over time to be valuable. That's why I think that Bitcoin's going to get flipped, because it just fails to evolve. And it doesn't do it. It doesn't service enough people. It hasn't evolved to service enough people and enough users. So, if Ethereum stagnates and Ethereum is not filling users' needs, then for sure other protocols and other chains can gain on it. And I think we already saw that happen with something like BSC. Even though it is centralized, it offered users something that Ethereum can't right now, and that's super low fees and faster transactions. So yeah, we've already seen that play out, I think. And it's very hard to tell what's gonna happen 15 to 20 years from now. Even like 5 years from now, it's basically impossible. My bet obviously is on Ethereum remaining dominant. Ethereum is evolving at a rapid pace. There's still lots of development going on. But from an investment perspective, you can play it any which way you want. It's whichever which way you're comfortable with. And just as an example of something, there was a chain that in 2017 called Aeon that was, at the time, everyone was really bullish on. They're like, okay, it's an interoperability protocol. It's going to build bridges between different chains. It's going to be awesome, blah, blah, blah. And, I had some Aeon. I traded my ETH for it back then, which I regret doing, because if you look at the Aeon ETH pair right now, it's really bad. Like, it's basically down like something like over 95%. And that's just one. There's other ones out there too that are down against ETH, and it's just been like I think the newer protocols, like I know Solana has been pretty good against ETH lately in terms of performance and things like that. But it's just very hard to. It's the same kind of thing with DeFi tokens. But maybe in the long run, some of these protocols can survive. But picking them is hard. Picking the winners is definitely hard.
Yeah, man. The intention of my question wasn't necessarily from an investment perspective, but more like understanding the future of crypto and how it can solve humanity's problems. Like Ethereum obviously does so much, and if it replaces the financial system, it can be absolutely awesome. Like the world's going to be such a better place. But yeah, just man, thanks for the answer.
Yeah, and I mean, on that note, there's definitely Ethereum, like I believe, is going to be the backbone for the new financial system, and I do believe that there's other chains out there that will fill niches. I'm particularly bullish on like the utility chains like Filecoin and Arweave. I don't own any of the tokens, and this isn't about the tokens, but in terms of what they can enable, what's called permaweb, where essentially you can have like permanent, forever storage in a peer-to-peer network where people are incentivized to keep files and things like that. I think that obviously serves a massive use because at the end of the day, we're trying to decentralize as much as we can, trying to get back to the original vision of what the internet was supposed to be, which was a decentralized protocol. So yeah, definitely keeping an eye on some of these other things, but they work to enhance Ethereum as well, I think. Awesome. Yeah. Anyone else, feel free to chime in if you've got a question about anything. Doesn't have to be Ethereum related, it can be crypto related. I saw a couple people go off mute there. Maybe they didn't want to talk over each other. Oh, no.
Trying not to talk over someone who is attempting to ask a question.
Mm-hmm. No, yeah, I think it's fine. I think, yeah, go ahead if you had a question.
Just wondering if you're following anything on Uniswap and the layer 2 possibilities. Very general. I don't follow too closely, but I'm very excited for it.
Yeah, they've been a bit quiet on that front. I mean, Hayden Adams put a tweet out the other day saying that we need layer 2 now or whatever, something along those lines. I can't remember exactly what the tweet was. And they have said that they were going to deploy to Optimism shortly after they deployed V3. It's now been 10 days since V3 and we haven't heard anything about Optimism. And, I'm hearing from some people in the industry that, Optimism is not optimistic as, they're not as optimistic on it as they would like to be. There are other solutions out there, and coming, and I think that it's good that we're not going to just rely on optimism. Like we have Arbitrum, ZK Stink, Starkware, and Polygon, and all these sort of things. So I think what Uniswap needs to do is not be kind of like maximalist about it. They can deploy to optimism when it's ready. That's all well and good. But I think users are hungry right now. So in my opinion, Uniswap should deploy to everything that's ready today. Whether that's Polygon, Arbitrum's coming out with their DevNet on 28th of May, so Uniswap will be able to deploy on there. And Arbitrum uses optimistic rollups, similar technology to Optimism as well. Starkware is going to bring out their generalized EVM layer 2 and CK Sync too. So yeah, on that front, I just hope that Uniswap doesn't choose to go down the maximalism route and just go with Optimism. I hope that they just deploy Uniswap to multiple layer 2s.
Very nice. You were advisor for Polygon team, or sorry, the Matic team, correct?
Yeah, that's correct. Yeah.
And their layer 2 is it tied in any way to Binance or no? Is it just separate things?
No, I mean their whole platform. They originally did an IEO, an initial exchange offering on Binance a long time ago for the tokens, but no, they're not tied to Binance in any way in terms of like their actual platforms. And yeah, Polygon was known as Matic Network, until up a few months ago. They did the rebrand, I think, in January. So, but yeah, I don't think there's any ties there right now.
Cheers, thank you.
So I had a question regarding the airdropping of governance tokens. For the first kind of airdrops, you just had to hold Ethereum. Like for example, with Omiza Go, if you had Ethereum, you get these OMG tokens airdropped. Later on in 2020, they changed it to the second kind of airdrop, where they had to use the DApp in order to get an airdrop. Like with Uniswap, if you use the DApp, you get Uni tokens. And what you're seeing now is that projects are airdropping tokens to Gitcoin donators. And this annoys me a little bit because you're basically buying funding in a wink wink nudge nudge way. There's no promise whatsoever for an airdrop, but people will still donate in the hopes for an airdrop. So it's kind of iffy to me. And my question regarding this all to you is, what do you think is the future of airdrops? Or in other words, how do you see projects trying to airdrop to the right users? Because that's what they're trying to do essentially.
Yeah, this is something that I've been thinking about a fair bit lately, actually, and I'm glad you asked the question here. I think airdropping is a cat and mouse game, because once you do an airdrop once in some way, it gets gamed the next way. I mean, we saw this play out after the Uniswap airdrop, where people were trying to game the 1-inch airdrop, and 1inch basically saw that and basically was able to get around that. And things like that. But now, yes, definitely, we're seeing it being gamed with the Gitcoin donors, because there was an airdrop done to Gitcoin donors, and people were like, well, I better just donate just in case, because I could get an airdrop out of this. And there will be other protocols that airdrop to Gitcoin donors, and I do think it muddies the waters there. And unfortunately, I don't think there's much Gitcoin can do about this. There's no real way to prove it. I mean, if these users are legit and they're donating $1, for example, I mean, that's the same as just a normal user donating $1, to a project. But I guess on that note, the future of airdrops, I don't know, to be honest. I think there's still a lot of experimentation that can happen here, but it always results in this cat and mouse game where once you do an airdrop in some way, it's just going to end up getting gamed for another project. So I think that the future might just be like, essentially something got to do with maybe a hybrid of like liquidity mining / airdrop, where you do work for the protocol, in some sort of way, whether that be with your capital, or you do work with like actual work, not just with your money to liquidity mine. I actually think airdrops in general aren't the greatest way to distribute tokens anyway. And a perfect example of this is a project that I'm pretty close to called Index Co-op, where they only airdropped 1% of tokens of index tokens when they launched back in September to DPI holders, and there'd only been like 2 months worth of DPI lifetime, so there wasn't that many holders. But 1% isn't very much, right? And they kept most of the supply in the treasury. And what they have been doing over time is they've been rewarding these index tokens to actual contributors that have done things for the Index Co-op, which is essentially a DAO. Whether that be creating content, doing work like business development, any sorts of things like doing dev work, hosting community calls, whatever. I think that's a better way of doing it, because what ends up happening is you get tokens into the hands of the right people, the ones that actually are part of the DAO, they've done the work, aren't just parasitic, and haven't just been, just giving you a donation or used your app once and now expecting some free money. So I actually think that's the best model, and their community is extremely vibrant. I mean, I encourage anyone who is interested in getting involved with a DAO or a community, particularly in DeFi, to check out the Index Co-op, because what they've created by harnessing these really good incentive mechanisms through contributor rewards is that they've got a massive group of people now who are pretty autonomous. Actually, it's actually a true DAO where these people go out, they do work, and then they come together, and Index token holders can vote on proposals to pay out these contributors I think it's each month, the cadence that they do it on. So I do think that airdrops, there's really not much of a future for them. I think the future is distributing tokens in a much fairer and I guess like much better way. Hopefully that answers the question.
Thank you.
Right. Okay. So, hello, Anthony.
Hey.
Hello. Okay. So my question is that, then what kind of DAO do you actually recommend a DeFi beginner to start actually?
Yeah, I mean, it depends, I guess, what you're interested in, as well as kind of like, what DAO you want to join. What work you're interested in doing. Do you want to join an early stage DAO or a later stage one? What is your skill set, sort of thing. I think from what I've seen, the Index Co-op is pretty good. Like it's been around for a few months now, but they're pretty good at onboarding new people. As long as you are bringing value, they're pretty good at getting you on board and getting and finding you work to do, or you can find work to do yourself as well, and getting kind of like paid contributor rewards for doing this. But there's so many of these DAOs now, whether that be like big projects like MakerDAO or Aave and Synthetics. Like they might be too big. There's a lot to get, I guess, like involved in those ecosystems might be a bit harder because you need to build up your reputation, and it takes a bit longer to do that with the bigger projects. But there's plenty of new DeFi projects that are launching DAO first out there, and to find them, I mean, I cover a lot of them with the Daily Gwei on the YouTube videos. I sometimes post them in the Alpha Leaks channel and things like that. But there's a lot of earlier stage projects out there which you can get involved in, and there's, I mean, in terms of finding them, I mean, the same resources, Bankless will cover them, and you can go to DeFi Pulse. They've got something called the DeFi list. I think it's linked at the top of the website to find these projects, and you can kind of know if they're small still. You can just look at the Discord and see how many members they have and how active it is to see if they're still small, and if that's something you want to be a part of, then yeah, you can just simply just start talking. You don't even have to do a resume or anything or apply. You can just start talking to people, going on the forum, seeing how you can contribute, and get started like that. There really is no barrier to entry in a lot of these DAOs. You can be anyone. You can be a dog. It doesn't matter, right? You can just you can contribute to these DAOs.
Okay, so it's basically just don't be embarrassed or maybe limited by your skill set, isn't it?
Yeah, basically, essentially, you're only limited by your imagination and skill set of, like, you can do whatever you want. You just have to, show the DAO that you can contribute, but your contributions are valuable and add value to the DAO, and that's your in, essentially. And I've seen people come and do this over time where they do work first, they come and present it to the DAO, and then they get to know the community, they get more involved, and then you build up your social score. It's like any kind of like group in general, like any social group or any company. You build up your social capital over time, and you become more entrenched over time as well, depending on how long you spend in the ecosystem, and then people get to know you and you become a regular. Like it's all humans at the end of the day. So I think viewing it like that, I think is the proper approach.
Okay, then thanks, Anthony.
Awesome. Thanks for the question. All right, coming up on the hour mark here. We can keep going if people have more questions. I'm happy to keep going for a little while here. Or if you don't have questions, anything you want me to talk about or give just general views on, I'm happy to do that too.
I'll just
One
repeat
guy one guy asked a question, but maybe you couldn't hear him.
Oh, okay. Maybe sorry. Whoever that was, I didn't hear that.
It's Shabuk.
Ah,
Yeah.
Chabu. Okay.
Can
Go
you
ahead.
hear me now?
Yeah, I can hear you now.
Sorry.
Yeah.
So good. I wanted to know about how you saw risks coming up to 1559, and particularly with the merge. You've talked about a few things related to miners, things they can do, but I mean, do you see any really bad risks, things that are sort of existential, or do you see just maybe we'll have a few technical issues that get resolved, part by part over a week? But just curious how you see risks coming up with both of those events. Thanks.
Yeah, I don't see any technical risk with 1559. Some of you may not know this, but it's actually been live on other networks like Filecoin, and I think Nia has it as well. So the actual implementation works. It's been live on test nets, and so the technical implementation works. It does what we want it to do, and everything's kind of fine there. So I don't think there's any technical risks, and I don't think there's any risks of miners revolting either. They tried that, and their punishment was that we sped up the merge, right? So I think that they're not going to try any more funny business from now on because of that. But the merge definitely is a much bigger kind of thing than 1559, because the way I like to think about the merge is it's basically replacing an engine in an airplane while the airplane is flying. So you're basically doing a hot swap of an engine of an airborne plane. So when you think about it like that, and then you relate it back to what the merge actually is, it's essentially hot swapping proof of work for proof of stake. So and that's a big deal, right? Because leading up to the merge, there has to be an incentive for miners to keep mining the network, right? Inevitably, some will fall off because they'll basically go to other chains and they want to beat other miners to other chains so that they, get the profits first and things like that. And then there was a post from Vitalik, I think maybe a few weeks ago, about how we can, make sure that miners keep mining the last block that we need them to, until the merge is done. I think generally, I mean, the incentive is just to do that. I think and sorry, from Vitalik's post, I think from memory, he said that as long as like one miner was doing it, it would be fine, as long as that block gets produced, or at least one mining pool. And I do think there are some mining pools that are Ethereum aligned anyway, or at least like not hostile, so they'll just keep doing it anyway. So I don't think there's actually any risk of like miner revolt there either. But technical risk is definitely a thing. We've had the merge running on test nets and it works. We know it works, but because it's such a big thing, and because it's basically trying to essentially merge a $500 billion network into a brand new consensus mechanism that's only been live. By the time the merge happens, it'll have been live for probably 12 or so months. It's a big deal, right? And I think, honestly, the technical risk as time goes on gets less and less. We saw that there was a bug on the ETH2 mainnet with the Prism client, which was a very rare bug that there was a super rare edge case, and it was quickly patched. So but other than that, the Beacon chain has been running very smoothly. So if we can just do this clean kind of changeover to proof of stake, then I think it's going to be fine. I don't foresee too much technical risk there either. And the developers and researchers are going to test this extensively. They're not going to go ahead with this unless they're confident. We saw this play out with the Beacon chain mainnet. They didn't rush it, right? There was multiple delays. There was never an official date given, but there was multiple kind of delays where people were expecting it to come out at this time, but it wasn't. And that's because the developers and researchers were not confident in launching it until they did. And that's the same thing that's going to happen with the merge. We all want the merge as fast as possible. Believe me, the devs want it faster than all of us, and the researchers want it faster than all of us. But until they're confident that it can go and work without a hitch and that they've covered all their bases, it's not going to happen. So, and from that point of view, I wouldn't expect there to be much risk at all with that, because they know how serious it is and how big of a deal it is. And once it happens, it's done. That's it. There's no need to worry about miners anymore, which I think is pretty cool.
That's great. Thank you.
All good.
Okay, Anthony. So there's one more question that just spring up in my mind. That actually, what's the mentality behind the devs that really want to launch a DAO with their protocol? Because like launching a DAO, this means they're releasing their hard work, releasing their control of the hardware to a bunch of strangers, basically, right? So actually, what's the incentive that make them do that?
So there's a few different motivations here, and there's actually hybrid approaches too. So maybe I can talk about the motivations, then go into the hybrid approaches. So motivation one is you want to decentralize the protocol. The DeFi developers, their whole point is to not have control over it, right? For a number of reasons. One reason being regulatory, right? It's very hard, if not impossible, to regulate a DAO. That doesn't answer to any one jurisdiction. If you have a sufficient level of token holders or amount of token holders, sorry, that means you've got sufficient decentralization. So it's very hard for any regulators to go after that. As I said, you want to decentralize it because you believe that this stuff needs to be, decentralized. A lot of the time, they want to have a token too. Like that's how, I guess to be honest, that's how like investors get a return on their investment. That's how the team makes money as well, as from these token sorts of things. And tokens can act very positively to coordinate both capital and governance through the DAO as well. But in terms of the hybrid approaches that I was talking about, you can do a DAO but still have control over it. Because your protocol is very new. So, for example, the index co-op is a DAO where the token holders vote on everything that happens, but the actual changes happen via a multi-sig. So the set team that launched the index co-op, they have a multi-sig, and whenever the community votes for something, they basically push that transaction or enact that on chain for the DAO. This happens for M-Stable as well, another project I'm involved in. This happens for a number of projects still. Like Synthetics still has admin keys, even though they are a DAO, and things like that. So actually, maybe they gave it up later. They have a funny structure. Synthetics. They have like 3 different DAOs. But essentially, you don't have to cede control straight away. And I think the admin key thing is not so that they can keep control. It's so that they can upgrade the protocol and cleanly as well, like technical upgrades and things like that too, because. Some teams don't want to have to relaunch the whole protocol from scratch, like what Uniswap does. Uniswap doesn't have any admin keys, so every time they launch a new version, they have to relaunch the entire thing, and then all the capital has to migrate over. That becomes, a bit difficult. Same thing happened with Aave. But there's other teams that are just happy, having this kind of control for the short to medium term, upgrade the system, keep building it out, and then slowly kind of like cede control over to token holders in an on-chain way. Where, for example, MakerDAO is a full DAO. Like all of the stuff happens on chain from MKR token holders, and there's a few other projects out there that do this, like Compound as well. But for the earlier stage projects, they'll definitely do a hybrid approach, which I think is fine. But yeah, motivations are the same for every project. Like token for a variety of reasons, right? For coordinating capital, return on investment for investors, and team and stuff like that. You also have decentralization because that's the ethos of the space, right? And DAOs can also attract a bunch of new people to work for, I guess, like your protocol that you wouldn't have been able to attract normally because of, you were just a centralized company. Maybe you couldn't even hire these people because they were in different jurisdictions or whatever. Whereas a DAO, everyone can work for a DAO. There is no kind of like, there's no sanctions, there's no, legal, regulatory stuff to worry about. It doesn't discriminate. So yeah, I hope that answers your question.
Okay, yes, thanks, Anthony.
All good. Cool. Anyone else? Maybe I'm not hearing anyone else. I don't know what was happening there before.
Man, I have another question. So I'm just trying to look at the big picture, and obviously crypto is still relatively small, and not many people know about it. And people are talking like about a huge transfer of wealth to the crypto people, and obviously that wealth is partly gonna be transferred from very rich, currently very rich people, and those people own a lot of assets that are going to be devalued. Do you see any risk that there's going to be like huge forces threatening the crypto world, on a government level or just on any other levels? Because people obviously that are going to lose their wealth are going to be really, really unhappy. So just like as a whole, do you have any view on this subject?
Yeah, I mean, oops, excuse me. For sure. I think I have like a, I think it's a complex topic, right? And I think overall it can be answered by basically going through the game theory of the situation, right? Because this system is global, because it runs on the internet, to shut it down or to fight back against it, by doing so, you cripple yourself. Because say you're a country or a nation state and you say, okay, well, we're going to ban this from happening, something got to do with crypto, or we're just going to ban crypto. Well, all these other countries and nation states aren't banning crypto, so they're just going to, continue on building out, crypto infrastructure, building out the future of finance, whatever, and then you're going to be left behind. So I think the game theory holds that it's actually a hindrance for any of these nation states to ban it and to kind of like come down on it or regulate it too heavily, because that means that their own country and their own economy will suffer. So yes, these things will challenge people's wealth. It will challenge existing systems. It will disrupt a lot of existing systems. But I think it will play out in the same way the internet did, where by not embracing the internet, you basically fall behind. Like there's tons and tons of companies that were essentially, completely destroyed by the internet because they didn't embrace it. And nation states didn't really ban it. China, with their own way of controlling it, they basically created their own internet. Maybe they can create their own kind of blockchain. They have their CBDC stuff, but fundamentally, in most of the world, we all use the same internet, right? We all kind of like can access the same sites, and even if the sites get blocked, there are ways around it. Like in Australia, they sometimes block sites. They blocked 4chan once. It was like a DNS block, so you could just get around it very easily, and sorts of things like that. So there are DeFi apps already that have to block certain jurisdictions. Like for example, you can't even use DYDX in the US. But the thing is that you can either use a VPN to get around that, or you can use the smart contracts directly to get around that, or you can use another interface that isn't the DYDX official front end. So, from that point of view, it's just going to be very hard to control or regulate any of this. And, in terms of like wealth transfer, that's a basically impossible thing to control, because you'd essentially have to get like every government to agree to like, either ban purchases of crypto for, say, non-accredited investors or something like that, or you'd have to just join in. And really, the only way is to join in, and that's why we're seeing a lot of institutions adopting this now. But that actually further kind of legitimizes the entire ecosystem and further increases the wealth distribution or redistribution, because typically younger people, or at least younger investors and people who are into technology, are the first adopters of these things. And then you have like the older people who are more conservative. They're not like into risk taking. They're the ones that are buying it through an ETF or something like that. And a Bitcoin ETF in the US hasn't been approved at this stage, and maybe it comes this year, but that's like into 10, 11, 12 years into Bitcoin's life. So all that upside that the early adopters got, essentially, is the later adopters aren't going to get that anymore, and that's where that wealth distribution comes from. So I just generally think that there's no way to stop this or control it or regulate it. It is literally, unstoppable, for the most part, I believe.
That makes a lot of sense, actually. Cheers.
No worries. A few other people that joined, a few newer people. If you had any questions you wanted to ask, feel free to ask them. Anything, crypto, Ethereum, whatever.
Just a very generic question at this point in the stage. To prevent oneself from selling one's Ethereum and like to lock it up in validator nodes, what are your thoughts on this? I mean, I currently run one validator, but I'd be interested in looking at furthers. What do people think in general, but potentially running more than one validator?
It's funny because I think it depends on like every individual situation, right? If you don't plan to sell your ETH anytime soon anyway, then to me it's like a no-brainer to just stake it, unless you're using it for something else. Like if you're using it in DeFi, then obviously it's caught up or tied up there. But if it's just in cold storage and you're happy taking on a little bit more risk, like it's really a tiny bit more risk, and you're happy running validators or whatever, then yeah, it makes sense to stake it, to stack some more ETH, and then Obviously, it's locked until the merger happens, but as I was saying before, the merger is going to happen. There's no way it's not going to happen. So yeah, I would suggest, I'll not suggest, but I would say that like if you are someone who plans to hold ETH for many years, then it makes sense for you to stake it if you're not already using it within DeFi. But maybe someone else has a different thought on that, or to answer your question.
Perfect. Low enough risk is what I thought. Yeah, cheers.
I actually think staking is probably the lowest risk thing you can do with your ETH right now, in terms of like earning a yield on it. And the yield obviously isn't, too high. It's like, I mean, it's pretty high for normal standards, but for crypto standards, it's not. It's like 6-7%, which is pretty decent. But if you want to take on more risk with your ETH, you can always, put it in Maker, borrow some stablecoin, borrow some DAI, sorry, and then go yield farm with that. But then you expose yourself not only to smart contract risk, but also liquidation risk, and things like that. And you're also paying a fee for that privilege too. So yeah, I think staking is definitely the safest and the least stressful way to earn a yield on your ETH right now.
The less stress, that's the key takeaway from me. Cheers.
Yeah, that's it.
So does deposit ETH into a Yearn vault actually is a staking?
So the Yearn Vault uses Lido finance in the background, which they issue a staked ETH token called ST ETH, which essentially gives you exposure to that. But the problem is that sorry. The Yearn Vault will actually put your ETH into the Curve pool, which pairs it with the ST ETH token, and will basically yield farm like that. But the ST ETH token is essentially a representation of staking, so you can earn the yield that way. But there may be the problem with that is that there may be tax implications. If you trade your ETH for ST ETH, does the tax office think that you've disposed your ETH for another asset? Even though technically it is kind of like the same asset, just with a yield on it. So I would check on that depending on where you are. But yeah, there are ways to do that without running the validators yourself. You can just buy ST ETH, for example, or like trade your ETH for it if you want to, or pair your ETH with ST ETH in a Curve pool and earn some rewards on that. But that's more risk because it's not just staking; it's also putting it in Curve, which is smart contract risk, and I guess like it's an AMM pool as well. So there's some additional risks there too.
Okay, then thanks. But another question. Do you have intention to launch a DAO?
For the Daily Gwei, no. I mean, no. A DAO. I think a DAO really does require a token for coordination, both of capital and human coordination. So, yeah, I don't think so. Just I don't know. I people have asked me this question a lot over the time, and I did give some thought to it. As I said, I want to see how Bankless plays out, but I don't really see a purpose for it at the end of the day. I don't know how much value it would provide from, on top of what I'm already doing, sort of thing.
Okay, yeah, that's a pretty tricky question. Thanks for answering that.
All good. Ooh, Mahesh Shetty, you're off mute. I can hear. There you go. Thank you. If you had a question, feel free to ask it though. I think Crypto BKK, you go off mute, but I can't hear you if you're asking a question, unfortunately. Disco Dancing as well. If you want to ask something, you're off mute too.
Speaking about, oh yeah.
No, I was just reading the chat. I hadn't checked the chat. Dommy asked a quick question. He was asking what the mangas in the background are. These are One Piece manga. Dommy. Anyway, go ahead.
Speaking about Curve, what do you think distinguishes Uniswap v3 with Curve? Because I'm still not sure. I mean, Curve is for stablecoins, but Uniswap v3 also greatly enhances support for stablecoins. And I'm kind of in the pickle of, I mean, Curve is easy. It's deposit and forget. You provide liquidity and you can forget about everything. Uni v3 is a little bit more complicated because you need to determine your range. Well, for stablecoins, it's easy. It's around the $1 mark. But I'm still not sure yet how they will live in harmony. I mean, I don't think Curve will win from Uni or Uni will win against Curve. But I'm not sure where they stand right now.
I'm in the same boat as you. I think this is something that a lot of people in the ecosystem are watching and wondering how it's going to play out. But in saying that, I think that it's just at the end of the day, people prefer different platforms. Some people prefer Curve, some people prefer Uniswap. And Curve's liquidity hasn't drained into Uniswap V3 or anything like that. Maybe long term it does, but I do think that they can live in harmony, even though that might be counterintuitive. I do think that they can exist in harmony, and I do know that Curve's working on a V2 as well, so maybe they have some key innovations there. But it does come back to the questions of like, what is the moat, right? What is the, can one protocol just like take over all the other protocols because it just has everything? I don't think that's the case. I think that the more complex a protocol is, the harder it is as well to kind of take over. And, different protocols and different DAOs will have specializations in different things. So, yeah, it's going to be interesting to see it play out. But I do think they can live in harmony. I don't think that there's any, like, Uniswap V3 is going to kill Curve or anything like that. Just reading the chat here. Is there any other questions? Someone's saying staking APY. Oh no, they're having a conversation in there. My bad. Yeah, Crypto BKK. I can't hear you if you're trying to ask a question. Maybe you can type it in the chat if you want to ask something in the general chat. But anyone else, yeah, feel free to ask away here. We'll probably wrap it up soon, maybe in 5 minutes. Getting late here, 12:30 a.m. So yeah, any final questions, I'm happy to answer them, and we'll probably wrap it up.
Do you know what happened to Peepit? There was a huge influx at the start of 2017 where there was a lot of social projects like Peepit. I think you had the Dan, I forgot his name, the ES guy. He had I forgot its name. There was like this paid blog post.
Steam it?
No. It was a different thing. But either way, my point is, Twitter has a lot of criticism that they're censoring stuff. So a lot of people are saying, well, cryptocurrency is uncensorable, or in some way or another. So we should make a Twitter for Ethereum or a Twitter for crypto. Do you think that holds any ground? Do you think that's even a possibility? Because when you're dealing with crypto, you're dealing with crypto economics, and then probably tweets will get monetized. And if content gets monetized, it turns into a shilling fest.
Yeah, I mean, I think Peepeth, essentially the fees got too high for them because they were doing everything on layer 1. I think the technology just hasn't been there to enable these kind of things just yet. There have been experiments on other chains like Steam or Steemit, which was around for quite a while, which is famous.
That's the one, yeah.
Yeah, which is famous for the hostile takeover from Justin Stun, and then they forked off to something called Hive, I think, and they were doing this. But yeah, I always thought that the incentives were warped, because if you were paying people to post content, they would just post like rubbish content, and there were vote buying going on and like trading of different upvotes and things like that. So I don't know if that model can work, but a decentralized social network is interesting. But it needs moderation, right? If anyone can post anything they want on it, then what's to stop it from just evolving into like a complete, shit fest? I mean, you can see what happens when there's unmoderated boards everywhere. Like, I mean, I just as an example, many people may be aware of, 4chan is mostly unmoderated. There is moderation for like illegal content, but mostly it's unmoderated, and that is just like, it's not everyone's cup of tea. It's pretty bad. It's chaos essentially. So I mean, what's stopping a decentralized Twitter from turning into that? There has to be some level of moderation, and I think that it's going to be hard for even a DAO to moderate that. And maybe it takes the Wikipedia model. I mean, Wikipedia technically is a decentralized platform where anyone can post anything they want to it. It's not, I mean, technically it's not decentralized, but it's an open platform that anyone can post anything to, but it's moderated by a, diverse set of people. They, earn reputation for what they do, and they, they have like control over what gets on the site and things like that. Maybe it has to be like that sort of model, but yeah, I do think the technology is just not there yet because of the scalability issues with Ethereum in particular. Just checking the general chat. What are your thoughts on Index? Index. I was just talking about Index Co-op before. Extremely bullish on it. I mean, I'm biased because I was part of the team that launched Index Co-op with Set, and I'm still an advisor to Set. I think that they're the best DAO in the space right now, if I'm being honest. So definitely check them out if you haven't yet. Crypto BKK, I can see your question here. What are your thoughts on algo stablecoins? I think they're interesting as experiments. I think a lot of them, the majority of them, are Ponzi schemes and will fail because their incentive mechanisms don't make much sense. But I do think that a lot of them are also cool. I do think that the experiments, I'd like seeing experiments play out. My favorites are probably, I mean, I think it's funny because like it depends what algo stablecoin, because there's different ways to do it. I mean, there was ESD and DSD and all that sort of stuff that did like a coupon system, which I actually considered to be pretty much a Ponzi because it required people to essentially just like keep buying in to keep the value like afloat, and like, you know, it would obviously not stay at its peg because the incentives were kind of messed up. And then there was there's like Fei protocol, for example, which is using protocol controlled value, which is another mechanism. And then there's Rye from Reflexar, which essentially doesn't peg itself to a dollar, it pegs itself to itself, which I think is actually really cool as well. So yeah, I mean, all for just watching experimentations play out here. And Rick Jones is asking a question. What do you think other index-based protocols like PiDAO and indexed finance? I mean, I haven't really dived too deep into them. I'm aware of them, of course, and essentially, you know, you can consider them competitions of the index co-op, I would guess, but they're doing different things, taking different paths. I think they're fine. I just don't know too much about the individual projects themselves, but I'm pretty sure they've got like, you know, the same sort of setup as Index Co-op, where they have a DAO, they're producing index products and things like that as well. Rick Jones saying it's pegged to a pi number. That's just an arbitrary number that they came up with. Rye is actually just pegged to itself and can deviate from that. But that was just like the number that they created at the start, which was quite funny, I thought. All right, final questions, anyone? And I'll wrap this up for today. I think that's it then, unless I think there's a few people going off mute, but I can't exactly hear you.
Thanks for all the info.
Awesome. Well, yeah, we'll end it there. Thank you everyone for joining the first AMA. Probably do this, you know, every couple of weeks or every so often. You know, happy to always answer any questions in the Discord channel as well. The recording will be up on YouTube, you know, shortly, probably tomorrow. I'll get it up there. And you can go back and listen in and, you know, pass it on to your friends or anything if you want as well. So yeah, thank you again everyone for joining, and have a good evening, morning, afternoon, wherever you are in the world.